All right, and welcome to another episode of the Investor Financing Podcast. And I'm super excited for this interview because we go back a long time. I would say it's been 23 years. And actually, I know, isn't that crazy? 23 years. And actually, Tiff here actually got me into the business, the lending business, and was a loan processor prior to being an originator. So she's not only been a loan processor and originator, which is the kind of the best of both worlds, because like a lot of loan officers you deal with are just not very detail oriented, and they don't have the same, they don't know how to set up files, they don't know how to structure loans. So Tiff has that background, which makes her a terrific loan officer. I think she's been a loan officer for like 15 of the 20 something years she's been in the business. Sorry to date you, but you still look like you're 22. So it's good. Like,
that's my goal. I don't know if I'm reaching it, but that's my goal.
Yeah, usually people in real estate, we age quicker because it's a little bit of a stressful business. But luckily for us, we haven't aged that bad. So it's a good thing. So anyways,
you look the same too.
Without further ado, let me introduce Tiffany Rose with Guild Mortgage. She's not only a mortgage originator, she's also really into personal development and has some coaching programs she does, and really kind of it's amazing to kind of follow you from all the years. I first met you when I was, I think, 20 or 21 years old, and now I'm 40. Now I'm 44. So I met you a long time ago. It's been amazing to watch your journey. And, you know, I've been to your house. You have a beautiful house, and you were really smart. You built a beautiful ADU unit, and, you know, you maximize, and you're always looking at investment strategies. So today, a lot of our viewers are really interested in, right now, the hot topic is vacation rentals, short-term rentals. And I get a lot of calls because I do some of the non-bankish type of loans. And oftentimes my first conversation with them is, are you W-2'd? What's your credit score? How do you look on paper? Are you going to have a DTI problem, which is debt to income problem? And if they say no, I say, well, you should maybe look at this as a second home purchase, because you're going to get higher leverage and better financing. So today I figure we'll dive into some topics about, you know, purchasing second homes, and maybe some tips and tricks where these borrowers, maybe if they own a couple rental properties, I believe underwriters only look at 75% of gross rents, little tricks like that can help a borrower quickly to determine, you know, am I a good fit for Fannie or Freddie, or possibly Tiff has other options that are what we call non-QM options, which are really good pricing, and we don't need tax returns and things like that. So the market right now is kind of an interesting time, because sometimes for a little bit of an interest rate hit, you can get away with a lot less headache by doing some of these non-QM loans. So welcome to the show. Why don't you give everybody a quick intro about what your real estate career and what you're doing in your investing world, and your podcast summit and all that good stuff.
Oh, wow. That's a lot. You just made me realize how busy I feel and lately. I've got so much going on. So all good stuff. So I've been in the business for, like you said, I met my amazing mentor who you worked for as well, Jerry, and from Western Heritage. I think he's still dabbling in loans, but he's a lot older now. So thank God he brought me into the business and really believed in me. And I should have been fired. We all should have been fired, I think, at that place many times, because I was 18, 19, 20 years old. But he taught me the business. He believed in me. He saw something in me. And I just stuck it out in the career through the thick and thin. Got my real estate license, I think around 1 years old. And I just have always been all commissioned and bringing in loans. So back then we were able to do, it was a real estate license back then. So remember when you could just have the real estate license, you can sell property and do loans. I could actually be the realtor and the lender on the same transaction. So that was interesting. So that was a great moneymaker, and really a way to connect with both sides of the transaction. You know, you have your hands on with both sides. But then after the crash, things just changed. And to 2008 brought in NMLS licensing and all kinds of stuff. But I've been in the business, made President's Club the last few years, and always have been top producer, but I just work and work and work. So that's my real estate background. We have Team Tiffany Rose now under Guild Mortgage. So I'm like a little company within Guild Mortgage, which I love. And we have a great branch manager, Bob Cooley. We have a lot of different programs, which, you know, like you said, we'll get into that. So that's that with the lending part. I'm currently working on building Lake House, 2 of them, buying land, which I've actually never done that piece before. So this is going to be interesting. So working on that. And yeah, my mom lives in the ADU that I built on my property and have a rental property in San Ramon, and we're doing this summit. So how's that?
That's awesome. I love it. So
yeah,
let's dive into the fundamentals of Fannie and Freddie guidelines for a second home. Just overall, what's out there, and this is assuming that the borrower can qualify, not using, if you're buying this for, that's going to be, hey, I'm going to use it for a couple of weeks out of the year, and then I'm going to collect some rent from it as an Airbnb or a vacation rental. Well, you can't use that income. But if you're a strong borrower with very low DTI, you could probably debt ratio that property.
Yeah.
So what are you seeing in the second home world? And you know, that might be a good place for many of the listeners to look first before going into a non-QM or a commercial type of loan.
And that's a really good point, because I think people skip over it because they think hard money. I'm an investor. I've never done this before. So they actually go, which I actually made that mistake. I went the hard money route, not realizing that I could just go the normal traditional route. So I said, this is way too expensive. It's weird because hard money is easy. It's just expensive. But then it's like the cheaper stuff that's within Guild Mortgage and those kind of Fannie Freddie programs, they're more difficult because you have to qualify paperwork wise, but it's a lot cheaper. So once I went back that direction, I qualified to do this as second home and do my investments kind of that way, because it will be something I intend to be in part of the time or majority of the seasons. So a good thing about going just a traditional regular Fannie Freddie way is, like I said, the interest rate's cheaper. You can do 10% down, so 90% loan to value. And the interest rate's going to be, as right now, about in the 3%. The only catch is, like what you said earlier, you have to qualify without using that projected rental income. And you have to, you know, W-2 to have a 2-year history. You could be self-employed, but again, have a 2-year history. So it's more stringent, but hey, if you can qualify as a vacation home, then you can do that.
Yeah. And that's I would always look that way first, unless you have partners and maybe there's some risk element where you want to put it into an LLC. That's when you're not going to want to do any type of conventional second home. Are a lot of the second homes, is it usually just like one loan with like a built-in MI, or is it usually a first and second type of
structure? It's going to be one loan with a built-in MI, or you can pay separately the MI, because when you build it into the rate, which this does confuse a lot of clients at first, so you can build it into the rate. So instead of having a separate mortgage insurance payment, you take maybe a 3.75 instead of a 3.5%, for example, or you take the 3.5%, but then you have maybe a couple $100 a month mortgage insurance, but you can get rid of that mortgage insurance later on once you get 20%, 25% equity, depending on the program. So most people, though, to answer your question, just 10%, all one loan, whether you build it into the rate or have a separate mortgage insurance. So no second loans with that.
Awesome. I think a lot of people don't understand like the power of the financing, which is the biggest component of the whole deal. Yeah. And just even if you're not, you know, never done a deal, I often talk to people about like, hey, maybe your first deal is a house hack where you buy a duplex and you live in one side and you get FHA financing. You only have to put 3.5% down. Yeah. People out there, you should be paying attention to that, because imagine 7 years ago, if you would have bought a duplex in Oakland and you paid 250 grand. Well, now that duplex is worth $1 million, and you could live there for free if you lived in one side. You move out, you refinance, you pull the equity out, you go do it again and again and again. And I think that's the power of having a good loan officer that a lot of people don't get. Like, you need wherever you are, whatever you're listening to, you need a Tiffany to go to run things off of that know like the ins and out of lending. Is it going to be a conventional deal? Is it not going to be a conventional deal? Even if you're a first-time home buyer, I always tell first-time home buyers, think like an investor, because real estate ownership over the long term, you know, and we went through the 2007-8 downturn. That was very tough for people in the real estate world, and values plummeted and all that stuff. But the reality of it is, if we knew what we knew then, what
I
we
would
know
have
now,
prepared.
yeah, we would have held on to all the real estate we hold. We wouldn't have been stressed out because we could have rented them out and we could have covered our costs. But instead, a lot of us sold properties. It was a hard time. And I look at it now, the first house I bought in San Ramon, I bought it on a lease option, and then I refinanced and did like a purchase. It was like a hybrid loan, and I bought it for like 325. It was a duet. It's worth $1 million today. And I go, why didn't I just
that
hold
was
that
like
property?
Ocho's Rios or something, right? That was over there at Twin Creeks. I remember that.
Yeah. Yeah. And so
Easily.
real estate is a powerful tool. And even with home prices being where they're at right now, because of the cost of financing is relatively inexpensive historically right now, it still makes sense to buy instead of rent in a lot of markets. Plus you get the tax write-offs from the insurance deductions and so forth. So guys,
and that's a really good point. I wanted to in there is I got rid of real estate instead of making myself uncomfortable and selling my BMW. You know, back then during the crash, I was in my 20s, and the huge lessons learned. I'm such a better real estate investor and loan officer because of those times. But if I would have just got uncomfortable, rented out some of the rooms, BMW, drove around a junky car, really downsized and kept, for example, my Livermore house, I short sold that in 2008 or 9 for, I don't know, 375. It's almost $1 million. That's way more than people's 401k has grown since then, than any investment stocks, you know, for the most part, on that for the average investor. So always invest in real estate, hang on to real estate. Don't be afraid of the market. Even right now with house values being more expensive, like you said, the money's still cheap. Rates are in the 3s right now on most of the products.
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
Tiffany, like over the years, I've really watched you in like, I don't know, the last maybe like 7 years specifically, you've really kind of gotten like a growth mindset. And so like, a lot of my friends are all in real estate, right? Because we've been engulfed in this industry for 20 something years.
Yeah.
What kind of drives you now? Like what's your vision for the next 5-10 years of your life? I mean, what do you want to investing and your lending business? What do you see happening here?
So in the future, and what I'm working on now is I really want to get that passive income going strong with what we're talking about, short-term, you know, Airbnbs and buying properties as vacation homes and renting them out some of the time. That's my long-term goal for the passive income piece. But for me working at Guild Mortgage, first of all, it's the best company I've ever worked at. Loved Western Heritage, but they went away. But Guild Mortgage is awesome. And I want to keep serving as many people as I can and getting the message out to help them put, you know, low down payment. There's so many loans out there and you could pay less than you're paying for rent now. So my mission now for 2022 is especially is to get my message out to as many people as possible. And that's through social media platforms, summits like what I'm doing now, and just really keeping in contact with my past clients and just living my purpose, because I really do love what I do. And it sounds like you love what you do as well. I mean, it's so ingrained in us. We're not going anywhere. So real estate for us is here to stay, right?
Yeah, for sure. I love real estate. I think the big piece I missed early on was really more recurring revenue.
Yeah.
And yeah, we can make a decent living originating deals and loans and stuff, but really like what I get the most enjoyment from is like helping people like, you know, buy rental properties and grow their portfolio. Or I do SBA financing. So I'm working with people that are buying franchises now, and then I dove into the franchise world, and now I'm like, oh, I should own some kind of semi-passive franchise where I could manage the manager and have another stream. So I look at everything now totally differently than I did before, because you realize that the average millionaire has 7 streams of income. So
yeah,
what are my streams of income, right? I have a portfolio in Indiana. I'm looking at actually buying a 6-unit property in Pennsylvania right now. And I know with what's going on with inflation right now, at some point there's going to be some kind of slowdown or something. But if you buy good cash flowing assets and you stress test them, you're limiting your risk exposure. So let's kind of dive now into alternative non-Fannie and Freddie programs. Let's talk about bank statement programs, DSCR loans or debt service coverage ratio loans, even loans for self-employed borrowers. The guidelines have once again laxed again. I know if you don't have 2 years on an owner-occupied property, for example, if you don't have 2 years, but you have 1 year, some lenders will let you do that as well. And then also talk about the mechanics behind when you get a file in and you run it through a desktop underwrite, that sometimes what's called for on a desktop underwrite is all you need. So if you have a relatively low loan to value, sometimes they don't need bank statements, or sometimes they don't ask for a pay stub, or sometimes they don't even need an appraisal. Can you kind of walk us through like steps of that as well?
Yeah. So the second part, what you just mentioned, is I'm amazed at how many lenders don't read the DU. They'll just give everyone tax returns and W-2s, and all it's asking for is like 1 year's W-2 and 1 year's pay stub. So what happened is there was like an overcorrection in the market, as you know, in like 2009, 10, 11, 12, even 13 and 14. It was just this overcorrection from the crash. But now it's starting to be more realistic again and lighten up. So any lender that you work with, make sure, I tell my team, make sure you're reading those DU approvals and only provide what's being requested. So that's like more of a Fannie Freddie type of approval or type of transaction. Now, another thing that you mentioned was like the alternative stuff. So alternative stuff would be, a lot of self-employed people don't know that we could take statement loan. It's not going to be Fannie or Freddie, but we take your deposits and that's all we look at. So if you do a side job and you've been doing it consistently for even 1 year, some of them, all we need is 1 year's, not tax returns, but 1 year's worth of bank statements. We add up what your new mortgage payment will be, whatever shows up on your credit report versus your deposits, do an average of those over 12 months, and you got yourself a bank statement loan. You can do as little as 10% down on those types of things. So anybody listening or watching right now that's self-employed, don't be discouraged, because I'm telling you, there is a lot of products out there right now that are completely legal. It's not the stated income, old school stuff, and they have great rates.
Yeah, that's good, because I was looking at doing a second home that I would use sometimes, but Airbnb it. And I think now I would need to do a bank statement program for the qualifications. And a lot of our investors out there, like I was just talking to an investor yesterday, and he wanted to buy, he had $400,000 to 1031 exchange into a rental property. He buys like 100-unit apartment complexes, like easy, right? With the banks, because they lend on the cash flow of the property. It's harder for him to get a conventional loan because he's got too much complexity. He depreciates, he writes off stuff on his tax returns. And then I told him about the DSCR loan, and he's like, oh my God, like I don't need tax returns. Yeah. And the rates are not that bad. So, there's so many options out there. I think people need a long-term strategy and I like the fact that, if you're haven't been in the loan business like Tiff and I have for 20 years, you should be listening to this and just learning the questions to ask, because maybe you have some kind of weird things on your past, your credit, like for me, like I have a weird kind of structure. I have some W-2 income, and then I have a bunch of losses on some businesses that I run. So I, barely pay taxes essentially legally, but when it comes to financing, it's difficult. And so when I refinanced my primary house, for example, the desktop underwrite only asked for W-2s, and I was in the clear, because if they would ask for my tax returns, that might have been like, they might have thrown it out, because it would have been like, well, what about this LLC? What about this loss, this and that? So you got to learn how to navigate as a real estate investor, because it's easier to use conventional financing in the beginning to leverage and get the best terms possible. But then eventually you're going to have over 10 properties. You're going to need to learn about commercial and doing all that fun stuff.
And there's a lot of people that overthink these types of things, or they're trying to outsmart their loan officer and do it their own way. The best thing to do is go to a credible, trusting person, whether it's investing or just traditional lending, whatever you're trying to do. and say, hey, run my credit. Let's come up with a plan. What are the opportunities here? So even if you have a 2.5% rate right now and you never want to refinance again, but you have $800,000 equity in your house, have a conversation with a lender that you trust, that you know is creative and trustworthy. And they can give you, I love to sit down. My mind like starts going wild because I'm like, take out this, do an equity line, buy this property, and then you could rent out this, and Airbnb is huge. And I have all these ideas, but people try to, they either are nervous because they don't know, they don't understand what the opportunity is, or they think, I've had this happen to me a million times. Hey, Tiff, don't run my credit yet because I'm working on it. I'm like, let me run your credit, tell you what's on there. I can run a simulator that says, hey, pay off your $500 Macy's card because it looks like it's max, but it's only $500. You'll get 40 points. Stop worrying about what your FICO is. Just ask the question, allow me to run your credit. Who cares about drop for the inquiry? And we can come up with a plan for that. Or people say, hey, Tiff, call me in 6 months because I'll have $40,000 saved. How often, I mean, you and me both know how much life happens. You're not going to have $40,000 saved 99% of the time. It's better to just talk to your lender, do a 3.5% down or a low down payment, half a loan, and buy a house. Forget about 6 months down the line. Who knows what's going to happen? Or you're going to need that money and never save it and never become a homeowner. So that's a great point, Beau. Just, it's really important to ask and see what the opportunities are.
Yeah. And I literally hate people that call and say, what's your rate? Right. Okay. Yeah. Well, first of all, we need to know a little bit more information.
Just a little bit.
Yeah. Yeah. And second of all, like you brought up this person with $800,000 of equity. It's like, I see these people and they have this one, and it's great. You have a property with $800,000 of equity, but they're still working their job. They're like trapped, right? Because they don't understand that they could take that $800,000. They could go buy a franchise. They could go invest in real estate. They could go buy a short-term rental. Yeah. That money sitting in your owner-occupied property is dead equity. And yes, is it a security blanket? It sure is. But I look at people that have like 2 or 3 rentals and they have tons of equity in it. And it's like, one of my friends has like $1 million of equity in 2 properties. And I'm like, okay, how much? He's getting like $3,000 a month of cash flow right now. I'm like, you could take that 500 or 600 grand of equity, leave some in the property, and you can then, instead of getting $3,000 a month in cash flow, you could probably convert it to like 7 months of cash flow. That covers all of your expenses. And like, you got to open up your mind and eyes to this stuff, because
get out of the matrix, right?
Yeah. If you don't do it, you're going to be grinding the rest of your life. And I personally know the feeling of grinding because I've grinded for years and years and years. And I know at my age now, I'm thinking, okay, like I am 44 years old. In 10 years time, if I'm still grinding as hard, like sometimes I look at other people in real estate and they're like in their 60s and 70s, right? And they're really smart and good at what they do, but they never took their own advice. If you're in real estate lending or sales and you're not investing in real estate, that's like we know this business. We should be doing it. That's my pet peeve too on those.
Yeah. You and I have talked about that before, because I went to some of your seminars and you're like, Tiff, there's people here who are chronic learners. They just want to learn, but they never apply anything. And I think it's because someone in your seminar said it feels really difficult at first, and that's why people don't do it. But once you do it and you do it again and again, it becomes easier and easier. Then you look back and like, why didn't I do this? I'm actually kicking myself because I went to one of your seminars probably 10 years ago now. Time flies, unfortunately. I was going to do some out-of-state properties, but I thought, you know what? It's only a little bit of cash flow, and 10, 15 years from now is so long. I would have had 3, 4 paid off out-of-state properties that are my nest egg for the future. So I'm doing that this year on top of all the rest of the investing. If I bought a house in Memphis or something 10, 15 years ago on a 15-year loan, it'd be almost paid off. I'd have 3, 4, 500,000 ready.
I know. I'll give you one thing. Like 3 years ago, I got a lead for this person that wanted to sell this little piece of junk bungalow house. It was 2-bedroom, 1 bath in Indiana where I buy. And I'm like, yeah, I negotiated with the guy. He wanted to sell it. I bought this house for $9,600 and I put in $6,000 of work. So I'm in it like $16,000. I get a check every month, $680 in rent every month, like clockwork, right? Like that, you could have swiped a credit card. Like you just think, I bought a 4-plex a few years ago for 32 grand. I put in about 20 grand in that. That thing pays me $2,200 a month. It's like, even though these small ones and you think, yes, I have to own a lot. And I agree that if you're going to do out of state, you should find like 1 or 2 markets out of state and do a cluster, 5 or 6. Like right now I'm doing Pennsylvania. That's my new market. I'm going to buy a bunch of, I used to live in Pennsylvania. And then I'm like, you know what? I found a couple markets there that I like that are easy and simple and the cash flow is there. I'm not going to get a lot of appreciation, but yeah, I think fundamentally, right? Like I could take one of my commission checks and I could put a down payment on a $100,000 duplex. Get a commission check, put 20 grand down on a 80% duplex loan, and rinse and repeat. Now I have that one's giving me $500 a month cash flow. The other one's giving me 500. Then I always think you should add up all your expenses, right? How much does it cost you a month to live, right? You should know that number: food, entertainment, beer money, childcare. If that's $10,000 a month, some people are $20,000 a month. Some people have $25,000 a month lives. I try to keep mine low, but I don't pass up on stuff. I'm not, but I have a relatively low, reasonable, right? So let's just say it's $7,000 a month that I spend every month. The first thing you should do is get $7,000 a month of recurring revenue. So you should be working up. What can I do to get $7,000 a month of recurring revenue?
Start with the car payment that you can cover. Start with little things, right?
You got it. So tell me about Guild. I actually, I'm always researching real estate, and people are always putting in Facebook like good mortgage company. Guild's actually been popping up a lot in my feed. So tell me a little bit about Guild. Tell me, do you mostly lend in California? Do you have a team that lends in other areas, and kind of dive into that?
So yes, we have a team that lends in, Nevada and Texas, what Team Tiffany is working on, but mostly California right now. So hopefully by the end of this year, we've got Nevada and Texas covered. Guild Mortgage as a whole, the culture is, I'm not just saying this for purpose of people think, Guild's the best company, go work with Tiffany. It really is the best culture that I have worked for. I knew when I was working at the big bank, won't name any names, but there's some things that I saw going on up top that I didn't like. And I thought this is going to not be good in a few years from now. And sure enough, it ended up going down. The outcome was not good for the reputation of the bank. It was a lot of overworking, no time to recharge your battery, those kind of things. Guild gives you that flexibility. They also understand that the team concept is really important, which for those of you listening, the team concept is so good to have somebody that has a processor, a marketing person. You don't want a lender that you only talk to them the whole time. They're always picking up your phone call. That means they don't do enough business, right? I mean, you want that team concept where you can call the assistant and you can call the person that takes the lead and gets the doctor nurse kind of thing. Guild supports that. And I love that. Our interest rates are excellent. Products are excellent. We can break out if we need to and do bank statement loans and those kinds of things. And everybody from the CEO down is just such an inspiration to me. And I am not going anywhere. So Guild is awesome.
Very awesome. I like that. And if somebody's out there listening and they live in the Bay Area and they're interested, are you recruiting any team members, any loan officers? What are you looking for right now?
I am. I've got a really, really solid loan officer assistant. And then I also have an LP1, which is loan partner one, that does kind of the upfront paperwork, runs DU, and just gets it all nice and pretty to hand off to Alicia. I have marketing. Our ops manager is awesome. And that's all within Team Tiffany Rose. So I am solid. And we are looking to hire maybe 1 or 2 loan agents this year for sure.
Yeah, that's great.
Yeah.
I'm going to put your contact information below in the video. And if you're listening to this on audio, you can go to on Libsyn or iTunes, you can go to investorfinancingpodcast.com and you can watch the video and get all the links there. But anyways, Tiff, I appreciate the 20-something years I've known you. And
I know, tell me about it.
It's always a pleasure. I'm almost like family.
You are. You were kind of almost family, right?
Exactly. So it's
there. Thank you, Beau. And I just wanted to plug really quick my Mortgage and Mindset in Minutes podcast. I love it. I have a huge passion for it. There's a lot of good messages. We're actually relaunching another 25 episodes starting in February. So we're loving sharing different things about Airbnbs. A lot of the things we've talked about. I call it Mortgage and Mindset in Minutes because it's short. It's usually not 45 minutes or an hour. And a lot of it is on mindset. I'll throw out something like 2 quirks of the subconscious because it has nothing to do with mortgage, but without the right mindset, you're not going to take the leap and do anything, buy a home, stop renting, get out of the matrix kind of mentality and explore your options. So I love talking about everything positive and some of the spiritual weird stuff that I get into, but it's a great podcast. So definitely visit that and go to Loans by for more info on the Guild Mortgage and my team.
Awesome. It was it was Loans by Tiffany.
Loans by Team Tiffany.
Okay, .com. All right, perfect. Because it kind of faded out. I think it all starts here. I know that like the most important real estate is between your ears, right? Like
It's changed my life, changed my business. Yeah.
I catch myself kind of having limited beliefs and self-doubt. And like this year I had like 5 or 6 simple goals. And I was like, all right, how fast can I like accomplish these year goals? I want to do them in the first quarter, right? And if you do that, it's like so powerful.
12-week year.
Yeah, I like it. But anyways, thanks so much. We'll see you guys in the next episode. Please like and subscribe.
You're awesome.
All right.